earlier in the week. Let's go live again to Michelle Snyder. We had a few tech gremlins a few moments ago, but we will persevere. Why don't we start with commodities?
Okay, well, the word inflation has now gone from nobody thought about it to literally on everybody's minds and lips, and we're seeing that reflected in the market through a myriad of commodities. It started out with the steel, copper, lumber, tied to the housing market, also because of supply chain disruptions and the whole COVID low labor force. We've seen that part spill over into food, so wheat, corn, soybeans all soaring. And now we're starting to see coffee and sugar going up. And so it's very interesting, this whole idea of commodities inflation. We have the Fed saying basically that this is a reflation that's going to be temporary and transitory. But on the other hand, this could wind up being much more insidious than that, particularly as the dollar, the U.S. dollar, is starting to fall again after a brief rebound. So we're looking here to see how long this sustains, whether or not the yields start to rise again as a result. And definitely what we're looking for is what kind of effect it has on the market in terms of the economic growth, because as we know, if the cost of goods start going up, eventually it can impact the bottom line for some of these companies.
Okay, and America's biggest banks kick off earnings this week. What are we seeing? What have we seen so far?
Well, Wells Fargo was of particular interest because that had made more of a move today than it had in the last decade, which is very interesting. So they had some really good numbers. And the overall banks in general, although JP Morgan sold off, Morgan Stanley also rose, their numbers are pretty good. So part of it is a result of the yields rising that we had seen, dividends going up, the fact that now they're being allowed to do corporate buybacks as of June if they pass stress tests, and hopefully some optimism there on loan growth. Loan growth was very, very small. People in this country are still complaining that they can't get a loan, but the anticipation is that that will change and ease up a little bit, and that will also help the bottom line for the banks.
And Michelle, as we have been reporting, cryptocurrency exchange Coinbase has made its highly anticipated public debut. Coinbase, the first major cryptocurrency startup to go public on a US stock market. Tell us more about this development, what we have seen over the past day.
Well, not completely unexpected. Sometimes the anticipation is more exciting than the actual event, so the fact that it sold off by the end of the day was a bit anticlimactic. But what's so interesting about this right now is from a trading perspective, there's no doubt that cryptocurrencies are here to stay, that blockchain technology is here to stay, and is only going to become more and more innovative. But in terms of the actual Coinbase exchange, we're going to want to see some level of stability, not a lot of volatility. And really, we're going to want to see the price hold up, or people are going to start to think that this is just a huge bubble. So there's that going on, but also it's not the only one. Binance actually had some of the greatest increase in terms of valuation over the last few days, and that could be the second upcoming exchange to go public at some point. So competition will start to emerge in the market, but in terms of the overall cryptos, I think we're still looking right here, so long as we stay over 60,000 in Bitcoin, and Ethereum now trading up to almost 2,400 is very, very positive.
Absolutely. And when it comes to Coinbase, you say what you're looking for is stability, not volatility. How confident are you of that happening?
Well, I think I'm not really sure yet. You know, I like to look at some level of price history, and one day it was definitely volatile today. It traded up to about 445 and then settled down at around 326. I think it was in the aftermarket around 333. That's a huge range for one day. So I would like to make that judgment more after I see how it trades out, say, over the next 2 or 3 days. We continue to see these wild swings. I think these retail investors that have been looking to jump in might become a little bit more reticent. And if it calms down and finds a range, that will be a good sign.
Okay, Michelle, as always, thank you so much for your time.
Thank you, Jackson.